Hey, good morning to you from Neil. I hope you're doing good and are ready to continue along the home buying process. We started a couple of episodes earlier. You would recall that as of now, we have covered three aspects of step number one, that is, getting your finances right. Firstly, the selection of the mortgage agent, the broker. Secondly, figuring out the mortgage payment for each month. Thirdly, figuring out the maximum mortgage amount that you could borrow. And in this episode, we'll tackle remaining aspects of step one, which are finding the right mortgage for you, talk about the different costs at or before closing, and lastly, action items to consider to address challenges, if any, encountered along the way. So let's get into it. And we would start with finding the right mortgage. Now, the one big statement that I would like to make upfront is the right mortgage is not just about the lowest rate. Don't get me wrong, rate is important, but not the only factor to be considered when selecting the mortgage. Whichever mortgage you opt for should align to your specific needs. And I'm talking not just about your current needs, but your future needs as well. So some of the features or the factors that you should consider are, would you like to put 20% down or more towards the down payment and avoid having to pay the mortgage insurance premium, which could be as high as 4% of your mortgage amount? Or do you like the surety of a fixed payment each month? And do you want to pay a premium for that facility? Do you like variable rate mortgages to also have fixed payments each month, or can you accommodate minor variations? What kind of prepayment privilege makes sense to you? Do you wish to be able to make double payment, prepay 15 to 20% of the outstanding balance each year? Are you willing to pay a huge penalty to break out of your bank mortgage, especially if it is a fixed rate mortgage? Do you want a 3-year, 5-year, or even a 10-year term for your mortgage? Do you want to make weekly payments, monthly payments, or accelerated payments? Do you wish to take this mortgage to another property that you might purchase in future? Do you want a standard charge on your title, or can you benefit from having a collateral charge mortgage? Do you want to use borrowed funds towards your down payment? Do you want to have access to the equity that you're building in your property without having to refinance the mortgage? And so much more. So now let's talk about what are the closing costs typically like. I won't get into much detail with each of these items here. Some of the notable cost heads are, firstly, the land transfer tax. If you are buying a property in the city of Toronto, then you would be charged the Toronto land transfer tax in addition to the Ontario land transfer tax. Secondly, fees charged by the real estate lawyer to complete the necessary due diligence, make the disbursements, obtain title insurance, and also settle any adjustments to be made against property tax, utility tax, etc. Lastly, provisional tax on the payment of the mortgage insurance premium if it is an insured mortgage. And these are all factors that you should consider when thinking about closing costs. Now let's jump into the last section of this episode, that is, it is very much possible that you don't qualify for the mortgage and the property that you're wishing to purchase now, and maybe you require an action plan. It could be the case that your current income doesn't qualify you for the required mortgage, and then maybe adding a guarantor could be an option. It could be that you have had some credit issues in the recent past, and we'll go with some of these credit issues and fix them. I can help prepare a credit improvement plan for you to improve your credit score so that you can qualify for a mortgage and a purchase as soon as possible, or maybe even investigate some alternate lenders who can extend a mortgage in the short term. If the down payment is found to be too short, we will go through a series of savings plans for you so that you are able to save towards your down payment and closing cost. The reality of what you want versus what you can afford and qualify for may be different. You may have to lower your purchase price and buy a smaller property to get into the property ladder. It may involve waiting until a probation period is over if you're employed, or for that pay rise to come through. You may also have to consider the option of a rent to own, where you select the property and become a tenant until you are ready to buy the property in the future. Remember that every problem has a solution, but it comes with a price. The question is, are you ready to act on it? With this, we conclude the step 1 of the home buying process. In the next episode, we will review steps 2 and 3, which involve getting a mortgage pre-approval, organizing your down payment, collecting documents to satisfy lender conditions, selection of the realtor, and eventually starting your house hunt. I hope you found this episode to be useful. As always, reach out to me at 647-904-5557 or email me at njoseph@mortgage.com, mortgagealliance.com if you have any questions. If you found this video to be useful, please share this video with friends and family, and don't forget to click the like button. I'll be back with more useful information shortly. Till then, take care.